So now that we understand how retail traders have come to be and how they are able to access the foreign exchange market, the next thing to consider is what are the natures of trading, available, and what are the styles of trading, you obviously understand that we are different people, we have different personalities. We have people that are naturally patient, we have people that are not, we have people that are partly patient or patient when they need to be. All of those personality traits really affect you when you're trading, because money is being traded here, and then there are some people that really have a whole lot of emotional attachments, okay? And then if it's applying to you generally in life, it's almost going to apply to you too when you are taking trades, because this is money that is being traded when you fund the real account. So more on demo and real accounts later. But then when you start trading with your real money, and then you start noticing that trade is going in profit for you, there is a way it might affect you, emotionally, and then that can make you take certain decisions that you might either leave to love or you leave to regret. So a whole lot of this, personality traits really affects us as traders. So the first type of traders that we have are the swing traders. Okay, so these are people that hold trades for a long time. So their trades could last for a couple of days, could last for weeks, and some of them even hold it for months. So they're a really patient set of people. And then majority of the trading decisions that they have are coming strictly from fundamentals. So they are making these decisions based on news releases, what they feel will happen to a certain currency over the other currency in the long term. So if, for instance, they believe that during January, right, this is just an example, January a swing trader gets into a trader before the end of the year, they believe that USD, 1 USD to Naira is going to be 500, and maybe at the time they did this, USD was at 374, and then at the end of the year it eventually goes into that. That means that they've made profit, considering all of the change that has happened from 370 to 500. Okay, so these are people that are willing to hold trades for months, right? You can, some people call them position traders as well, or there's a whole lot of misconception with that, but then basically swing traders hold trades for days, weeks, months, depending on where their profit target is and how long they are willing to hold it for. And the major difference between these people is that they'll have fewer trades running, right? And then they'll have wider stop losses. Okay, so stop losses are basically meant to protect your account from you incurring more losses. Basically, more on that later. Day trading, day trading is day trading as scalping basically needs you to be really skillful as a trader. You need you to study the market and understand how things happen, short changes in the market, and then make the best of those moves. Okay, and then these people hold their trades for few hours to 24 hours. And when I'm talking about holding trades for all of them, I'm basically talking about when they decide to take profit. So if they hold trade for 2 days and then eventually take profit, that means that they've allowed their trades to play out even when it was in little profit, for it to continue in more profit and eventually reach their profit target, for them to completely exit the market. Okay, so day traders basically they allow trades to run for a few hours, and the highest they can go is 24 hours or a little above that, basically. Okay, and then these people have mastered understanding price changes even in short term. Okay, they use changes that have happened within few hours, maybe in the past few days, to determine what is eventually going to happen, and then get into trades and hold it for a few hours to 24 hours. Okay, so this is it for day traders. And then scalpers basically are people that have mastered short changes in price. Okay, so these people are just looking to get in there, make moves or make profit from the smallest moves available in the foreign exchange market. So they just basically have to understand the patterns that will give them perfect entries to get in there and make money as quick as possible. Okay, and then the thing that really characterizes them and differentiates them from other traders is that they can go there and just aim for just a few pips. Okay, so pips basically is what we use to calculate the changes in the foreign exchange prices. Okay, but then they just go in there to make profit from the littlest of moves, right? And then they inject more volume, compared to the day traders and swing traders. They inject more volume. In foreign exchange is referred to as lot sizes. Okay, so you learn about lot sizes in the next section. But then they use higher lot sizes, they use higher volumes, to get into trade, so that from these small moves that they can catch, 5 pips, 10 pips, they'll be able to make a whole lot of profit from it. And then they do not allow their trades to run into hours, right? So they're basically looking at making profits in 5 minutes, 10 minutes, maybe an hour, or maybe 2 hours at most. They don't hold trades longer than that, basically. So these are the three different, three formal types of traders or trading styles that are available in the foreign exchange market.